Thursday, September 30th, 2021, Maneco 64, home of alternative economics and contrarian views. I have to say, it looks like the world, economic, financial world, is like almost like a war zone that you have to try to avoid the mines. There's so many troubles out there, and you would think, of course, well, the best insurance versus this financial, economic, even social, political mayhem is having two currencies that are not national, currencies that have survived over 5,000 years in terms of their purchasing power. Yes, gold and silver. We're going to look at silver, though, because many of you are probably asking, why is silver dropping so much? Why is the silver price dropping so much? Well, we all know about the paper manipulation. I saw a video the other day. Someone noted that COMEX and the LBMA, the paper market, for every ounce that there is of silver, they're hypothecating 243. So there's 243 paper claims. So we're going to look into that today, into a couple of charts of silver and commodities, and also something that Tavi Costa posted about the silver ETF, the silver miners. But before that, we need to go over some of the stuff that I'm seeing that leads me to believe that things will not improve in terms of the inflation picture. As you know, I think the inflation's already been created, or has. I don't think it has. I know it has been created already. The Federal Reserve has helped create 25% of all the money supply in US dollars that we've had historically. M2 money supply is gone from around 16 trillion last year, just before the crisis, around February, March time, to now almost 21 trillion. So we're seeing the central bankers now come out. They were yesterday at a virtual conference, I think, called the ECB Sintra conference. Sintra is in Portugal. I guess it's the equivalent of Jackson Hole for the ECB. And they were blaming everything and everyone but themselves. Messrs. Bailey, Powell, Kuroda, and Madame Lagarde. They were blaming the supply chain. They were blaming commodities. They weren't blaming all the fiscal and monetary largesse that we saw last year for a crisis that didn't need to happen, for a shutdown and lockdown of economies that didn't need to happen. And that's the reason why we're getting all the supply chain problems, all the shortages, all the rising prices, is because of that. You shut an economy, world economy down for a period of time. You keep giving people funny money, and you keep the government spending. What do you expect? No, but they're blaming the consequence of their actions for the problems, which is crazy. And that's why I still believe you need to have precious metals. Yes, I know it's tough. There's going to be a lot of people who are already probably shaken out. But yes, and I saw overnight as well that the Congress, or the criminals in DC, or the creatures of DC, have averted a government shutdown. Does this mean that the whole debt ceiling thing is resolved? No, far from it. That's still out there. That's still a problem. This is what Bloomberg says here. It talks about them averting the government shutdown, but it says at the same time, the standoff between Republicans and Democrats over the debt suspension shows no sign of abating. Treasury Secretary Janet Yellen has warned that a default looms on October 18th without congressional action. Concerns about the current impasse in Washington over the debt limit and other fiscal measures contributed to the biggest sell-off in equities since May. The 2% drop in S&P 500 index was partially reversed in Wednesday trading. yields on treasury bills maturing around October 18th rose more than those on other securities. So yes, historically, these impasses have been solved and things have gone on back to normal, and they might very well be this time, but I think the consequences of how they deal with it, how much they leave it to the last minute, or even if they default, could have a huge impact on the fiat currency system around the world. People could lose faith and confidence, which of course most of us already have lost faith and confidence in the people in DC and the central banks. But you could see the general public, or the normies, as Cliff High calls them, actually wake up and see that it's all a house of cards. So I think it's quite a serious situation. And that's why I'm very comfortable with having my gold and silver, my physical gold and silver, my bullion. And that's why I'm not selling, even though the price action looks really bad right now, I have to admit. So what else is happening here? Well, here in the UK, they're talking about how the furlough scheme ends today, 30th of September. And there's a possibility that a lot of people will be made redundant, because right now the government is helping subsidize about 11 million wages. So that's another big obstacle, I think, economically. I thought this was a joke, this story, the other one I'm going to tell you about. Now the UK government, with all the problems in the energy market, with natural gas going through the roof, they're thinking of taxing people who use gas for their heating. Can you believe that? So there you go. And they're also talking about helping people with more deficit spending. I've told you that the deficit spending and the monetary stimulus from last year, that's what's causing the rising cost of living, right? So now Rishi Sunak, who's the Chancellor of the Exchequer, he's saying that he's going to give out 500 million pounds to help people over the winter. Well, that's going to create even more deficit spending. But of course, a lot of the people who get that, they'll be happy, but they won't realize that that's actually making everyone poorer. And that's the whole Keynesian fallacy that we have. And unfortunately, most people want that. And that's why we're going to get inflation, or the consequence thereof. Well, we're going to keep getting the inflation, but we're going to get the rising prices. And now let's go to silver. A couple of things that I saw. The first one was Tavi Costa. He posted this on social media. He posts a lot on social media. I've interviewed him a couple of times. You can find him at Crestcat Capital. He's on YouTube. They do a lot of videos about the miners, gold and silver miners. But this is what he said: total capitulation. Silver miners, ETFs, just had their worst quarterly outflows ever. Almost 3 times as much as what we saw during the pandemic. These companies have become insane deep value opportunities. Time to step up. Am I advising people to step up? No, I'm just telling you what it looks like. It's up to you to decide what to do. The other one that I wanted to show you is a comparative chart between the price of silver and the Bloomberg Commodity Spot Index. The Bloomberg Commodity Spot Index just a day or two ago reached a 10-year high, or a decade high. And you can see that since 2016, apart from the period, let's say from mid-2017 to around, let's say, May 2019, silver was underperforming quite a bit the Bloomberg Commodity Index, and then it caught up. And then last year, during the pandemic crash, they both went down quite a bit. Silver got hammered even more in percentage terms, but then caught up. And even the performance of silver, as you can see, last summer was a lot better than the general commodities. And then they both reverted back to the same kind of performance. And now, though, I think you can see there's a big chasm between the performance of silver and general commodities. Yeah, it is possible that general commodities could follow silver lower, but personally, I don't think it will. I just saw yesterday that one of the Fed presidents, Daly, said that she doesn't see any rate hikes in 2022. I think a lot of the tapering talk and rate hikes and the dot plots, this is just propaganda. They can't afford to even think, I think, about raising rates next year. And they're going to have to keep inflating, especially with the stagflationary environment we're seeing right now, with all the troubles in the supply chain. I see a lot of business leaders are saying that it's not over, it's going to get worse. So we're going to get more and more disruptions. We're seeing all the programs, also the fiscal programs, and you might think that, well, that would be a bit deflationary, but no, the inflation's been created already. So I think silver will catch up there. So with that, let's quickly look at where the markets are this morning. I'm a little later than usual this morning. It's 9:30 a.m. London time. So we've got spot gold at 1732.65. We've got silver at 21.66. So both have rebounded. Silver is near the highs here. Yes, it has a lot of work to do, and we've even gone below, as you can see here, a level from last year when they bashed silver quite hard, from around 27 all the way down to below 22 in a matter of a week. We'll have to wait and see. I mean, there's another level, the high from 2016, around 21.11. That's a key level as well. But as I said, I'm continuing to stack. I bought some silver a couple of weeks ago. I might buy some more very soon. So there you go. Am I telling you to do it? No, you need to do your own homework and do what makes you feel comfortable. So instead of looking at the stock market right now after the metals, let's quickly look at the commodities. And I wanted to show you cotton today. And this is the problem with inflation. You get prices of several hard assets or commodities rising at different times. And they're going to give you a lot of reasons. Of course, the mainstream, oh, it's because of this, and that. And they're never going to talk about the inflation, the fiscal and monetary stimulus, the artificial funny money injections that we've had. But look at this here. We've broken, we've matched a 10-year high in cotton. And of course, it still has a lot of room on the upside. And you can bet the momentum traders, speculators are jumping on this cotton bandwagon. So there's another signal of fiat currencies losing value and more problems in terms of rising prices and cost of living for the general public. Of course, Mr. Powell and his buddies on Wall Street in the City of London, they don't care too much about prices of clothes because, yeah, it's a small percentage of their budget. But for the average person, food, energy, and now clothing is very important. And we need to keep that in mind. So what about the other commodities? Well, we've got WTI crude up 0.4%, just above 75. Natural gas is up another 1.5%. Yes, it has dropped from above 6, but we're still above 5. We're at 5.57. High-grade copper is at 4.16. That's down 2/3%. So let's go to the stock market. Apparently the stock market is doing well because they've averted a government shutdown, but I don't think that makes too much difference. Right now, the Dow future is up 220 points. I saw that yesterday. It finished up, but it wasn't really a great finish. I think it was up 90 points or so. And the other major indices, they barely went up. And I think the NASDAQ was down. Right now, the NASDAQ is up 92 points. S&P is up 27. Yes, the dollar did really well against all the other sinking fiat currencies yesterday. And today, it looks like everything is pretty much unchanged here. Yeah, with the exception of the dollar versus the yuan. Dollar's down about 1/8. All the other currencies are pretty much unchanged. I think the British pound is not looking good. You can see here this chart, the technical picture. Not looking good medium to longer term. We could see a little short-term bounce because it's sold off quite a bit recently. But yeah, I noticed yesterday that actually the price of gold in pounds and other currencies actually went up because gold didn't drop as quickly as the pound or the euro. So let's finish off here. Just have a quick look at the 10-year yield. Right now we're at 152.5. It's down 1.5 basis points, the 10-year yield. They've kind of calmed down recently, especially the 2 and 5 year. But yeah, as I said earlier in this report, there's a lot of landmines out there for the economy, for the monetary financial system. And I think, yeah, we need to be patient. As I said, gold and silver will do their jobs. That's my opinion. Could I be wrong? Maybe, but they will still buy something even if they don't go through the moon. They've had purchasing power for 5,000 to 6,000 years. But anyway, if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.